Why it's time for NIO to go big, a new era in China's EV market. Imagine a future where only a handful of electric vehicle, EV, brands survive in China. That's the stark reality NIO faces, and it's time for this innovative automaker to step up its game. Known for its premium EVs and unique battery swapping stations, NIO has recently introduced two new sub-brands, Onvo and Firefly, poised to ramp up deliveries as production speeds up. But here's where it gets controversial. A recent study by Alex Partners predicts that by 2030, only 15 out of the 129 current EV and plug-in hybrid brands in China will remain financially viable. This dire forecast casts a shadow over many automakers, except perhaps China's dominant BYD. Those 15 surviving brands are expected to capture a whopping 75% of China's EV and plug-in hybrid market. To put it in perspective, each brand would need to sell around 1.02 million units annually. Surviving this industry shakeout could lead to immense rewards. So, what's the catch? At first glance, China's new energy vehicle, NEV, market seems robust. In June, NEV sales surged by 30%, constituting 53% of all new vehicle sales in China, with Chinese brands holding 71% of the NEV market share. However, this success has a dark side. The market is overcrowded and fiercely competitive, driving incredible advancements in battery technology and cost efficiency. But it's also triggered a brutal price war, making it hard for companies to protect their market share and profitability. This is where NIO's golden opportunity lies. With its established premium brand and two new brands gaining momentum, NIO can either scale up to break even or position itself as a prime candidate for industry consolidation. NIO is already aiming to double its vehicle deliveries from last year to about 450,000 units this year, though it's slightly behind schedule. And if that wasn't ambitious enough, the company plans to break even by the end of 2025. This is a tall order, but NIO has made significant strides in cutting costs and supporting margins despite the ongoing price war. The coming months will reveal much about NIO's readiness for potential mass consolidation in the Chinese EV industry. It seems like the perfect time for NIO to intensify its marketing, incentives, and production efficiencies to propel its new brands to new heights. For NIO, it's crunch time to go big or go home. Daniel Miller holds no position in any of the stocks mentioned. The Motley Fool recommends BYD company and has a disclosure policy. Do you think NIO can defy the odds and emerge as a dominant force in China's EV market, or will it fall victim to the impending consolidation? Share your thoughts in the comments. Onvo L90 SUV leaked specs, 60 kWh battery option, 605 km range and 6-seat configuration. Exciting news is on the horizon for electric vehicle enthusiasts. Onvo's upcoming L90 SUV is generating buzz as new specifications have surfaced just ahead of its launch, confirming the inclusion of a 60 kWh battery option. Recently, details regarding Onvo's second model, the L90, were leaked on Weibo, revealing important updates about its trim levels, driving range, and energy efficiency. Additionally, a blogger shared official images showcasing two new exterior color choices for this family-oriented SUV from NIO's sub-brand, just a week before its official debut. The leaked specifications indicate that the L90 will be available in both rear-wheel drive, RWD, and all-wheel drive, AWD, configurations, with the 6-seater model offered in Pro, Max, and Ultra versions. The Pro and Max trims will feature RWD, while the Ultra will come equipped with AWD. Notably, both the Max and Ultra versions will include air suspension for enhanced ride comfort. Previously, it was only disclosed that the L90 would come standard with an 85 kWh battery. However, the latest leaks from user Shilin on the Chinese platform Stuxing reveal that a more affordable 60 kWh battery option will also be available. This smaller battery will not only lower the initial purchase price for customers but will also make renting through NIO's battery subscription program more economical. For context, Onvo's first model, the 5-seat L60 SUV, sees a price increase of 29,000 yuan, approximately $4,040, when opting for the larger 85 kWh battery. When it comes to range and energy consumption, the L90 Pro and L90 Max models exhibit similar performance metrics. With the 60 kWh battery, the RWD versions can achieve a CLTC range of 425 to 450 km, about 265 to 280 miles. In contrast, the 85 kWh variant can extend its range to between 575 and 605 km, around 360 to 375 miles, with energy consumption rates ranging from 14.5 to 15.5 kWh per 100 km. The Max AWD version has a slightly higher energy consumption of 15.5 to 15.9 kWh per 100 km, with a 60 kWh battery allowing for a range of 410 to 425 km, 255 to 265 miles. The 85 kWh battery can push the range further to 550 to 570 km, 340 to 355 miles. NIO has confirmed that the L90 will be available in a single-motor configuration, powered by a 340 kW motor, or as a dual-motor setup combining a 100 kW and a 340 kW motor for a total output of 440 kW. Like other models in the NIO lineup, the L90 boasts a top speed of 200 km per hour. The 6-seat version of the L90, alongside a confirmed 5-seat variant, offers a CLTC range of up to 605 km. In terms of dimensions, it measures 5,145 mm in length, 1,998 mm in width, and stands up to 1,786 mm tall, with a wheelbase of 3,110 mm. During a pre-launch event, Onvo showcased 5 exterior colors for the L90 SUV. However, recent leaks from Weibo user indicate that deep red and dark blue will also be available options. The official launch is anticipated by the end of this month, with deliveries expected to commence in August, although a specific date has yet to be announced. As competition intensifies in the 6-seat SUV market, Tesla recently unveiled its Model YL, a new 3-row variant of its popular model, which was highlighted in the latest catalog from China's Ministry of Industry and Information Technology, MIIT. Several Chinese manufacturers are also entering the fray with their own 6-seater models this year, underscoring a growing emphasis on family-oriented vehicles. In addition to the Onvo L90, Li Auto has introduced its Li i8 SUV, with pre-orders starting last week and an estimated price range of 350,000 to 400,000 yuan, $48,750 to $55,700, which is about 25% higher than Onvo's L90. What are your thoughts on the emerging competition in the 6-seat SUV market? Do you think Onvo's L90 will stand out among its rivals? Share your opinions in the comments below. ChargePoint stock analysis: should you buy or sell? Investing in ChargePoint, a critical decision point. The electric vehicle market hasn't grown as fast as many anticipated, leading to a significant drop in ChargePoint stock price. This downturn raises a crucial question: is now the right time to invest in ChargePoint? If you're considering where to allocate your next $1,000, it's important to weigh all your options carefully. For instance, our analyst team at The Motley Fool has just released their list of the top 10 stocks they believe are poised for impressive growth. Interestingly, ChargePoint didn't make the cut. But here's where it gets controversial: just because it wasn't included doesn't mean it's a bad investment. It simply means there are other stocks that might offer better returns. To illustrate the potential of these top picks, let's look at some historical examples. When Netflix was added to our list on December 17, 2004, an initial investment of $1,000 would have grown to an astounding $652,133. Similarly, when Nvidia joined the list on April 15, 2005, the same $1,000 investment would have ballooned to over $1,056,790. These figures are not just numbers, they represent the kind of life-changing returns that investors dream about. It's also worth noting that the Motley Fool Stock Advisor service has a track record of delivering exceptional results. With an average return of 1,048%, it significantly outperforms the S&P 500, which has returned only 180% over the same period. This remarkable performance is a testament to the quality of the recommendations and the expertise of the analysts involved. So, should you invest in ChargePoint despite its current challenges? And this is the part most people miss. The answer depends on your risk tolerance, investment horizon, and belief in the long-term potential of the electric vehicle market. While ChargePoint's recent performance has been disappointing, the company is still a leader in the EV charging space, and the industry is expected to grow exponentially in the coming years. Before making any decisions, it's a good idea to explore the top 10 stocks recommended by the Motley Fool. These picks could be the key to achieving substantial returns in your portfolio. To get access to this exclusive list, consider joining the Motley Fool Stock Advisor service. What do you think? Is ChargePoint a buy, or are you leaning towards one of the top 10 stocks recommended by the Motley Fool? Share your thoughts in the comments below and let's start a conversation.